Okay, so we're gonna actually have two lectures today. The first one is going to be about I'd say the forces that are shaping the future of the financial sector as a whole, and we're going to be talking about banking, and we're going to be talking about the new entrants into the field and different technologies that are kind of making things change. And in the second part of the lecture, which is going to be after a quick Q&A session that we're going to have in about 50 minutes from now, we're going to go deeper into the world of investments, and we're going to be talking about new asset classes and where things are going and where they're heading with the new technologies that are actually enabling, I'd say, challenging the paradigms that we have also in the investment fields. And as I said, you know, you know, the interface here is kind of weird, so please feel free and ask questions and participate and think as though we're sitting in a classroom, and please don't be shy. So first of all, I guess a lot of you have noticed that there are various forces that are shaping the financial sector and the future of money, and all of these forces are kind of affecting all of us, both as individuals, as organizations, as regulators, as investors, as asset managers. And you know, understanding where things are going is kind of like an important part, because it lets us you know, make smart decisions and adjust accordingly. And just, you know, to summarize a little bit about myself, so I'm a veteran in the fields of finance and technology separately for almost 20 years, but I've combined the two. I think for the last, it's like something like 12 years ago, I started combining the two. Before it was called Fintech, it was just because I'm a kind of a geek, both in technology and in finance. I was the business development manager and product manager at Trade, which is one of the biggest security trading websites in Israel. That was also chosen in Europe as one of the 3 best trading websites in Europe as a whole. I work as a COO right now at a technology company called Iconic in Monaco. And you know, I've built operations in various startups in different fields of technology. Originally, actually, I was a programmer in the .com era, and then I became an investment consultant. And throughout the years and through what I'm doing, I had been chosen a few times for several awards and recognition about the work that I've been doing. And mostly I work with I'd say regulators internationally and locally, enterprises, financial institutions, banks, stock exchanges, where the idea is I like to help these companies and people move ahead with the next steps in the evolution of finance. So, you know, it includes professional training and strategy and all the rest of it. And I'm going to start with a question for you guys, and this kind of like requires you guys to open your microphones just to practice speaking in public. What would you like to go over today? Because I can go over many, many things, and this field can be a whole course in the university. I've made stuff, but I want to focus on the things that are most interesting for you. So if you want to open your microphones and tell me what's the most interesting thing for you and what you would like to get from our talks today, that would be very helpful for all of us to kind of like, you know, fix ourselves to what you guys want. So please don't be shy. Okay,
robo-advisory.
Robo-advisors, you want to hear about them. Okay, what else?
Maybe crypto assets and their adoption.
The what? Cryptocurrencies and their adoption?
Yeah, cryptocurrencies as a class of asset and their adoption. Yeah.
Okay, crypto as an asset class. Okay, what else? Like, feel free, or like talking to somebody that lives this thing, and you can just ask me and tap into my knowledge. So what would you want me to talk about? These things are included, but I can talk more about them. What else would you want to learn and know?
AI in the finance sector, the role, how it will shape and reshape the sector.
Okay.
The role of human, whether it will stay.
Okay, will it stay? And how it's shaping. Okay, how many of you would like to understand blockchain? Was that something that you would like me to go into and explain the technology a little bit and understand what implications and what kind of use cases it can have?
Yes, sure. And what would be the practical implementation of blockchain in, I don't know, in finance and banking industry?
All right.
Yes, the micro securitization of assets in blockchain.
All right, micro securitization of assets. Okay. All right. Okay. Okay. So all of these things that you just spoke about, we're going to be talking about, and if I divide the talk into two phases, we're going to be doing the first one. We're going to be talking about more about what's happening in finance, including AI and including the entrance of new players and the new technologies into this ecosystem. And in the second part, I'm going to go deeper into blockchain asset classes, crypto, different kinds of asset classes that can be created on blockchain, where AI fits into investing, specifically robo-advisors, and things that are more relevant, I'd say, to investment trading and advisory services, okay? All right, so as we said, there are different forces, and I'm kind of going to look over all of them one by one. And if we're looking at the map of what's happening right now in the financial sector, we're going to be seeing that there's a lot of different areas that are being changed, and all of them are pressuring the financial system that we know until now, and they're kind of creating a new kind of finance that we don't necessarily know right now how it's going to end up looking like. And I'm going to be starting with the systematic entrance of the tech giants, which are technological companies, but one of the products that they're creating are financial products. And it's interesting to see what they are doing, because they have the ability, first of all, to create earthquakes, and they have the funds, they have the size, and they have a lot of power that many other companies in this field do not necessarily have. So I'm sure that all of you have already seen all sorts of examples of what can be done with Amazon Go, where you can just go into a store and buy, or what you can do with Apple Pay or Google Pay, where you just go into a store and you just pass your phone and you pay with it. The thing is that the pandemic has actually kind of like amplified these services, and you know, if we're talking about Apple Card, it has more than 3 million customers in the US, and it already partnered with Goldman Sachs, and Google Pay has more than 67 million Google Pay customers, and that's quite a lot of data if we're going to be, you know, touching upon data in a little bit. And during the pandemic, there's a very big growth in the usage of all these digital tools, and using the phones as I'd say a way of transferring money. But you know, the financial giants are not just, the tech giants are not just, I'd say, entering into the payment sphere or the payment area. They're also going into even lending. Let's say Amazon is giving loans to customers, and you know, at the beginning, Amazon gave, you know, the loans herself, but later on she understood that she should you know, work with banks, and she had an agreement with Goldman Sachs. And it's like a win-win, because on the one hand, you know, for Goldman Sachs, it gives them access to, I'd say, a very big amount of borrowers that would not necessarily reach their bank. And for the other hand, for Amazon, it allows them to use, you know, I'd say the benefits that they have in the marketplace in order to grow their I'd say their scope of services. Now I have a question for you, so microphone's on again. What are we seeing in this picture? You're invited to guess.
Amazon package.
Yeah.
Came, and the certification for the validation that the package reached the destination is by phone.
Oh, wait, okay, just a minute. It's a package. And we see the smile there. We know whose package this is, right? Okay. And what's happening here? What are we seeing on this side? You're seeing my mouse moving, right? What is this?
He's looking at the passport?
No.
No, getting money for the delivery.
Ah, all right, okay.
Getting money. You can pay online, but you can pay also in cash to UPS.
Okay, this is not UPS, this is Amazon. Amazon, when it entered India, it entered in a way that was beneficial both for, I'd say, the interests of the Indian government and for Amazon itself. What it allowed was that people, when they order from Amazon, when they receive the package, they can pay in cash. Instead of paying at the time of the order, they pay in cash in the time of delivery, but they can also add more cash money into your Amazon account, into your wallet, up to 3 times of the salary, okay? So that means that theoretically what happens is that Amazon kind of opened a digital wallet that allows people to put more money inside there, and this wallet had been connected to transportation, gas services, and other stores and outlets. And this kind of helped I'd say the Indian government that wanted a more cashless society and wanted to reach the people that are underbanked. Okay, so first of all, notice that, you know, if we're talking about a digital wallet, that's financial product that Amazon is offering here. And if you also allow people to deposit more money there, it's kind of like a question mark. Is this still a technological company? Where is the difference? And if you look at and you broaden the scope and look at Amazon specifically, this is actually from I'd say about even more than a year ago. This is the page, the front page of Chase Manhattan Bank for business. And if you notice and look here, you can see that almost for every service that Chase Manhattan is giving, you have a service that is given by Amazon, okay? It's actually giving the services that have to do with finance, okay? I think that one of the more interesting developments that are happening in the last couple of weeks is actually with Google. Google, somewhere around August, it teamed up with banks in America to kind of open its own banking service. Okay. Now the idea is that the banks will continue, you know, being the banks in the background, but the interface is going to be a Google interface. Now that's kind of interesting because you know. First of all, you know, I put here a few things to notice. First of all, you know, having digital presence. Also, whoever has their microphone on right now, if they could just close it because I can kind of hear noises in the background. And I'm going to continue. So first of all, if we think about, you know, digital presence, it's not like something that's nice to have in these days. It's actually kind of like the basis of what you need. And you know, digitally focused customer experience is it's basic, and especially during the time of this pandemic. And if we're talking about what Google is giving, then we're talking about automation. We're talking about AI, and Deutsche Bank and also other big banks, let's say BBVA, have actually joined Google in their ability to kind of go over the data and over the services and start doing things that have to do with the AI services that Google gives. Now, this is very interesting because for banks, it sounds like a really good idea. You know, I'm just going to do the user interface by Google, and you know, Google does everything that has to do with talking and communicating with my customers. And not only that, you know, Google has more than, remember we said 67 million Google Pay customers. That's a huge potential for a customer base for banking partners. But on the other hand, if we think about this, you know, there's the cost for this sort of thing, because banks are becoming dependent actually on the tech providers, right? And giving, you know, Google more access to more personal data. And where does that end? And we already know that there's some sort of issue with privacy and the ability, or I'd say the size and the power that Google and the tech giants already have. And now what we're doing is kind of like moving the banks into the background and moving the tech giants into the front. And we're going to see a really nice example of this in a few slides. Here's another question. What are we seeing here?
A street artist that is, and here is a QR code, so he's charging some money with the QR codes, right?
Exactly. This is in China, and what we're seeing here is a street artist, and what we're seeing, I'm doing with my finger instead of with the mouse, smart Meiravi, is a QR code. If people want to donate to him, they can just do it by pressing a QR code. Now, isn't that weird? Well, not really, because what we're seeing here are more examples. This is in the fish market and in the stores and in different areas. And what we're seeing here is WeChat. Has anybody been here in China during the last year? How much cash have you been seeing going around the streets? And how useful was your credit card? Okay, so China has actually kind of developed I'd say the most advanced fintech capabilities by two companies, WeChat by Tencent and by Alibaba Alipay. We're going to be talking about both of them, but let's look a little bit at WeChat for those who don't know it. WeChat is something like WhatsApp where people can send messages one to the other, but other than just sending messages, you know, to each other, people can send funds. I can just transfer money on my chat, and not only that, when I go to stores, I can buy things. And, you know, when I deposit money into my WeChat wallet, you know, and the money finishes because I've been shopping and transferring funds, something very interesting happens. I can, you know, I can deposit more, or I can just take a loan, okay? So it's a tech company, or actually kind of a retail company, that allows you to transfer funds, put money inside, and also take loans. What does that make it? Okay, and this is a technological company. And the advancement that we're seeing in WeChat is something that has not yet been duplicated in, I'd say, in the Western world. And here's another example, okay? 1.779 billion people, okay? This is the amount of daily payment transactions that happened last November on one system, okay, in one day. Which system was this? Can anybody guess? Those who know, don't say, but you know, your guesses are welcome.
Alibaba.
You knew that.
No, I didn't. I thought about how giant it is.
Yeah. Okay, so that's true. Thank you. So yes, this is the amount. Now this is more than PayPal, more than many banks combined. 1.7 billion transactions. I'm not talking about money, okay? Because if we're talking about money, you can see the amount of money that was transferred right here on the side. And Ant Financial has developed right now. It's the world's biggest fintech firm, okay? And it's not a financial company. This is a tech company, okay? And on the, I think it's 11th of November, I think we're going to be seeing this record be broken again, because there's going to be Singles Day again this year, and I wonder what number they're going to be reaching this year. Now, you know, the question is, you know, if we're talking about tech giants, like who would want to put their money in a tech giant? So a few years ago, you know, the answer was, you know, the young generations, the millennials. But the thing is that as the, you know, the years go by, the acceptance rate goes up and up and up. You know, we're talking about, you know, that we've reached 78% that were surveyed globally would consider switching from banks to tech giants. And, you know, if they're talking specifically about Google right now, then 27% of consumers would say that they would easily open an account with Google, okay? If, you know, 11% said that they would be their primary account, but, you know, people are happy to move their funds into tech giants. So if we're kind of like moving out of the screen and looking what's happening, then we see that we have the banks on the one hand, and we have a little amount of startups that are kind of, you know, giving services in different areas where I'm putting, you know, fintechs as PayPal would be one of them, and Square and other kind of companies that are, they're not small at all. But if we're kind of zooming out, what we're seeing is that in the background, we have this huge whale of the tech giants. Now, this is a picture that my daughter drew like 4 years ago. And I want you to notice something very interesting. Look at all the fish that have to do with banks and fintechs and all the rest. They have something, I'm pointing at it, that the tech giants, in her opinion, do not have. What is that?
Teeth.
Exactly. From her point of view, as a teenager, now she's 21, as a teenager, when she drew this, she was thinking of as banks as the big bad wolf that takes commission, right? And whereas, you know, Amazon, Google, and Facebook and Microsoft, they're all friendly. You know, Snapchat, for that matter, was, you know, was very in at that time. From her point of view, they're friendly. What you know, they don't have any danger. They're not taking any money from her, right? And I think that one of the before we start like kind of piling all of this information together, I want to talk about another example of one of the tech giants trying to make moves into finance, and I'm talking about Facebook, that as opposed to the other tech giants has been stopped again and again. One of their trials was, you know, trying to create Libra, the token. We're going to be talking more about Libra and where that is standing in the next part of our lecture on part 2. But a few months ago, Facebook also tried to add to their system, to WhatsApp, the ability to transfer funds from one to the other, just like we're, you know, we transfer pictures and documents. Facebook wanted to add the ability to transfer funds. And she wanted to do this in Brazil. And a few days before the launch, the Brazilian government said, no, we don't allow you to do this. We want to have our own system that allows, you know, people to transfer money from one to the other. So that is another kind of example. And if we're kind of looking at where this is going, then it kind of raises the question of, you know, could the future of finance actually be shifted into tech giants? Would banks become obsolete? Would banks become in the background of what's happening? So that's just one side of the picture that we're seeing, but we can look at the other side, because, you know, the entrance of these tech giants is not, you know, the only, I'd say, new competitors that banks are dealing with. There are also the fintechs that, you know, started out as small startups, and they're kind of growing. So if we're talking about N26, which is pretty familiar, you know, last I checked a few months ago, they had 3.5 million customers in 24 countries with no branches whatsoever. Okay, and if we're talking about Stripe, a few months ago, it announced that it's launching its lending arm. But the idea is that all of these service providers have actually kind of you know, become more and more relevant due to this pandemic. Because first of all, if we're talking about, you know, before the pandemic, 60% of customers under the age of 70 were using digital banking tools. After the pandemic, this grew, okay? The consumption exploded to the point where there was 200% increase in new mobile banking registrations, and the traffic rose by almost 100%. And, you know, and a lot of these new entrants into this field have actually been going into the new fintech providers and not to the regular banks, okay? So this is another step or another point that the banks are dealing with. And it kind of brings us to the question about the new business models that are based on a different source of income, as opposed to the, I'd say, the commissions that we're used to seeing. And another question for you guys, has anybody heard about this coffee shop? It's located in Brown University in the States. Okay, so I'm going to tell you a little story. This coffee shop, it's not open anymore, but it was there, I think, about 2-3 years ago. It's called Shiru Cafe. And when students wanted to go and buy coffee in this coffee shop, they did not need to pay with money. The patrons of the coffee shop, the students would come in and they would answer questionnaires, okay? And, you know, questions and different kinds of different areas. And then they would get their croissant or their coffee and continue with their way. But at the end of that year, you know, when the big banks in the area started hiring people, I think it was JP Morgan that was hiring there, out of the 30 people that it hired in that same year, 27 were patrons of this coffee shop. That means that theoretically, the students that were going to this coffee shop, they were paying with their data. And it kind of like sounds weird. Why would people be paying with their data in order to get coffee or a croissant? But when we stop and think about it, we understand that people have been paying with data for many of our services. We're all paying for data when we're using Google and when we're using Facebook or Instagram. We're actually coming with our data and receiving a specific service. And these tech giants know how to use and create revenue from this data. But there is a very, I'd say, philosophical question in the bottom of this, because the question is, let's say if we're looking at the students that were buying coffee, was the data that they were giving, was it worth more or less than the coffee that they received? What's the currency? Was that a correct currency? Was the value the same? And that same question could apply to all of us when we're giving our data to Facebook or to Google, for that matter. The service that we're getting in return, is it worth less or is it worth more, or is it equivalent to the value of the data that we're giving away? And that's, you know, and that's a really big question. And I think that the answer is kind of clear to all of us, because apparently, you know, if these companies are making so much money and billions of dollars from our data, that means that we're selling our data for a cheap price and Google is reselling our data for a much higher price. That means that the current, you know, I'd say currency rate is not correct, right? It's like there's an anomaly right here. And there's a whole question, and it's a legitimate question, that also connects to the second part of our lecture about blockchain, that says, you know, there's a philosophical question here. Why are people not the owners of their own data, and then we have the power to decide who we want to sell it to and for what price, okay? And then theoretically, people that are using online every day and, you know, and browsing or using Google could theoretically, you know, if they take the money themselves, would they need to work? Are they generating enough data in order to make themselves a living from that? But the thing is that this data also exists in the banks, okay? And this kind of business model where people are paying for data and receiving a service is something that that is not happening if we're looking at the financial sector, okay? And if we're looking at the monetization of the wealth of data, we can see that on the one hand, banks are actually, they're built on fees and on interest income, whereas Google is using the data monetization. So we're talking about two different models, and it kind of raises the question, so what's the wonder that customers are actually deciding to move to the competitors, whether it's Google Bank or if it's Robinhood or if it's any of the other, you know, giants or technology companies that are giving financial services? Because if they're, you know, getting the same kind of service without paying money and just paying with their data, which by the way already exists in the hands of banks, why should they add more money to that? And that's kind of a legitimate question, okay? Which brings us to the next point, okay? And that's the technology itself, because we're not talking only about forces that are coming from competitors and from different business models and the usage of data. We're also talking about technological developments that in themselves enable differences and changes and you know, new kinds of ideas and new kinds of services. All right, so we spoke about Amazon Go and we spoke about Apple Pay, but I want you guys to take a look over here. What we're seeing here is Kentucky Fried Chicken in China. And what we're seeing here is that in order to pay, the computer or the screen can see the face and there's facial recognition of the person. That means that you don't even need to go around with your phone in order to pay. Your face can be recognized and you can pay that way. And what we're seeing here is a wearable device that you can just put next to a terminal and the money is transferred from your wallet and you can pay in that kind of direction. And I think this is the craziest one, okay? Another question for you guys. What are we seeing in this picture?
It's a chip. I don't agree with that.
Yeah, well, we don't necessarily need to agree ideologically with things, but this is happening. This is in Sweden. And people are inserting chips into their hand. And with this chip, they can pay. And when they get to work, they can just put their hand up there and the chip is read. And it's a device just like any other device. And if we're talking about payments, these are all sorts of technologies that are moving things ahead. And you know, if we're talking about cash as a technology that people would transfer money in the hands, then in countries like in Sweden and even in China, we're talking about that the total value of transactions has declined to the point that there are only around 2%, 1%, 4% of transactions that are actually done in cash. All the rest of them are done through digital methods and through other kinds of methods and not using cash. Other technologies that we already are seeing more and more of are actually, I'd say, alternative interfaces to using mobile and web and face-to-face. And during the pandemic, we're going to be seeing more, and we are already seeing more and more of these things used. One of them is with chatbots. You know, we don't even necessarily notice when we're talking to a human or writing with, you know, to a human. And when we're talking to a chatbot that's giving us services, and we're talking to the point where we could ask our chatbot, what was my biggest expense last month? Or how much did I take on food last month? And the bot knows how to answer you for those questions, and you have the log of what's happening over there. And, you know, and another step forward is using Alexa skills. Have you guys seen the video of somebody just, you know, asking Alexa, what is my balance? Okay, Alexa, just buy this and this and this. And, you know, Amazon had a test with, I think it was Capital One Bank. And they use this kind of interface for people to, you know, to give financial services through voice and through messaging. If I'm going too fast or too slow or going over things that you guys know, please tell me. I can't see you, okay? I don't have any feedback from you guys, okay? Another interesting, I'd say, technology that's entering the field and everybody's talking about it is 5G. And you know, and it's going to have effects on financial technology as well. And here I brought a few examples. One of them is augmented reality, where, you know, when the idea is, and this is something that has been actually tried in different banks around the world, is that when you use your banking app and you're going around a street, you can actually see the prices, let's say, of menus of the stores around you, and you can tell all sorts of things about it, and you can actually order, let's say, place your order on Starbucks or a coffee shop right when you're still walking in the street and you're like seeing what they have, scrolling through the menu and ordering it already there. And this is something that actually a bank in Canada it started working on. It got stuck because I'd say that the data transfer was pretty slow. But the moment that 5G is here and in places where it's already implemented, these types of I'd say, mixing physical and virtual worlds are going to be seen more and more and more. Other sides of 5G is, you know, when we said that we're talking about a banking bot or a virtual assistant, this is something that we're talking more and more about. And the moment that we have the ability to connect, or let's say the machines have the ability to connect, we're talking about the ability to process micro nuances of our face and voice, so that the machine will be able to understand if we're upset or if we're happy or if something excites us. This is kind of like also kind of scary, because, you know, if we're going and we're seeing augmented reality and then I see a sale in one of the stores, this is something that the computer system is going to catch up on, and then I can start getting commercials, and I'm not sure I want that. You know, there's sales here in Zara or in other stores that are interesting for me, but this is the direction that things are going, and all of these are actually financial services. And one more example of financial services that are going to be affected with 5G is everything that has to do with IoT and smart houses, okay? Because one of the abilities that these small machines is going to have is to pre-order themselves. Let's say if the milk bottle sees that it's being finished, then it can reorder more milk to your refrigerator. And this is done by paying. So there are going to be payment services where IoT is going to be tapping into your virtual account or into your computer, into your bank account, and ordering more things. And all of these are like, we're looking a few steps ahead into, I'd say a year from now, or I don't want to say when, because sometimes it happens right away in my next lecture, and sometimes it takes a little longer. But the idea is that we're seeing many changes on I'd say on the technological level as well. And one of them is the extensive data processing power that all of us hold in our hands. That has a lot of implications, especially in the areas of finance. And I'm talking about our phones. Okay. Do you know that the phones that you're holding in your hand they're actually stronger than the first IBM that sent a spaceship to the moon? And we kind of like look at these things as though it's nothing, but the truth is that these things have a lot of power, and they can, process the data, and they can use this data, and it can be used in many different ways. And I'd say two of the technologies that are based on this ability are actually blockchain and Bitcoin. And in 2009, somebody or a group of people called Satoshi Nakamoto introduced actually two separate products, and it kind of started a snowball effect. And we're going to be talking about this right after our short Q&A. And we can look at both of these products separately because they can live by themselves. One of them is the token itself, okay? The use case of a token, you could call it money, currency, or I'd say a digital asset. And the other product is the blockchain, the system itself and its specific way of working that utilizes this high ability that we all have in the palms of our hands. So I'd kind of like summarize this first part of our lectures, and I'm I'm going to raise a question that that a lot of us are thinking about. People in fintech is the question is are we witnessing the next step in the evolution of money? And right after our questions and answers, we can move to the second part and think about what's happening with investment, money itself, digital currencies, trading, and also where does the regulator fit into all of this? All these things are happening, and what does the regulator think about this? Another point before we go ahead is that, we're seeing a lot of opportunities here, and, the things that we spoke about and things that have not yet happened or are happening right now, all of them, they hold some sort of risk in their hands, but on the other hand, they kind of hold opportunities for companies and individuals and investors because, all of these things are things that are, possible and they're not necessarily even ready or made. And that's, where we come in as investors and start thinking about, okay, what do I want to join into? Where do I want to grow? I'm going to end this part with an interesting quote by Gordon Moore, one of the founders of Intel. He said that change has never happened this fast before, and it'll never be this slow again. So I thank you for listening now, and we're open for Q&As.
Okay, so please ask, Meirav.
I have a question.
Mm-hmm.
It's like in our world, the currency is associated with a country, but
Mm-hmm.
it seems like we have huge, big new countries that can flip the money to their own currency in one day and affect billions and billions unrelated to any country lecture or anything.
Yeah.
So how can we be prepared for that?
Mm-hmm. Are you talking about the new countries as in the tech companies as a country?
Like Amazon, Facebook, Alibaba, whatever. These are the real countries because they have all the data on us. Any click, anything, any search, any something.
Mm-hmm.
And the transactions while buying and thinking like this. And the truth is, it's like I saw your slides and something hit me that it can be tomorrow. They are fully prepared, see China, and they can take over any bank that exists today, hostile or non-hostile, and how can we be prepared for this reality?
So first of all, this is a very, very good observation and a very good question, and I want to answer it in I'd say different ways. Okay, the first one is that you are completely correct. You know, I interviewed a fintech professional from China last January. She maybe it was me that brought Corona into Israel, because when I interviewed her, I got a flu afterwards. But I was really asking her this, and I was telling her, you know, what is happening? How is, like, what are the dynamics right now in China in regards to finance and technology? And what she explained is that WeChat has reached the point where WeChat gives the loans. It opened a little bank for itself, okay? And what happens is that when WeChat wants to give loans, it moves the request for the loan to the little bank that belongs to WeChat. And the thing is that behind this little bank of WeChat, there are all the rest of the medium-sized banks. And what happens is, let's say a loan wants to be given, then WeChat decides how much of it WeChat is going to be given and how much she is offering the banks in the background to join in on the risk and lend some of the money to the user. That means that what we said at the beginning of the conversation with Google becoming, you know, the interface, and behind it, they're going to be banks. It's exactly that. That means that the banks, if they don't have any connection to the users themselves, they're just the background. And we're seeing this happening live in China, okay? And that the banks themselves do not have the access to the customers and to offer, you know, the services. I'd say that the interface, not only on the screen, but in the, you know, the business generator has become the tech giant, okay? And that's a very big question, okay? And the second part of it is that the question that you're raising has been raised around the world, I'd say multiple times, both by individuals and by companies and by regulators. And I'm going to be, you know, I advise banks and financial services. And one of the things that they're complaining about is exactly this, because, you know, can you guys hear me? Yeah, it was cut off. Yeah, I'm sorry. Can you guys hear me? So one of the questions that comes up is that there's a regulatory difference between what's required of banks and how they're allowed to be working, and what's required of a tech company, okay, and how they're allowed to be working. It's a different set of regulations, and we know that the banking system and the financial system is very highly regulated from very different areas and different, they're not even allowed to cooperate amongst themselves in order to build some sort of platform that would, you know, keep Google or Facebook or Amazon out, okay, because of the law. Where on the other hand, the tech giants, you know, they have a different set of rules, even to the point where they don't necessarily need to adhere to the same rules of you know, keeping the risk when they're giving loans or when they're investing. And we're going to be seeing that, you know, in the next part of our conversation of the anomaly that is created here. Now, I can't say that the American regulator is trying to deal with this, and all the tech giants, Google and Facebook and Amazon and Microsoft, have been invited to the Congress and to the Senate to try to explain this and try to, you know, calm down, I'd say, the regulators, because everybody is seeing this. And when we're going to be talking about Libra and the token that Facebook wanted to create, we're going to see how crazy allowing her to do that, or you know, how I'd say how advanced what you were just saying is, okay, and how dangerous it is on a macroeconomic level. And the regulators are understanding this. The problem is that when the tech giants come and start to explain what's happening and what they're doing, the regulators don't necessarily understand. They don't necessarily understand what's happening. And you know, and it seems that I guess if you're asking me what the solution would be, it would be that they'd have to, the regulators are going to be, you know, you know, that's the solution that I see. If anybody has a better solution, it's going to be telling these tech giants that they have to divide themselves up. They can't continue being tech giants. They need to become various different companies in different sectors, with not, you know, with the no ability to cooperate with each other in order for this to not become what you're saying. I'd say the world that is a world that the country is a tech company, okay, and that's where the borders stand. So I hope that kind of answers your question.
The truth is, it's starting so many new questions, especially when I was thinking about the facial recognition and the biometric data that only the tech company really has, even though our, let's say, the Israeli government says you have a biometric passport now. But the truth is, it's just the tip of the ice, and the giants, the tech giants, have everything on us already. It's just, and if it sounds like the assets are ready, the computers are ready, the new computers and the new processors, everything is ready, which could have held them back in, let's say, a year ago or 2 years ago. It looks like it's going to happen every day. So my question still remains, what is the right way to be at least maybe prepared for this? Because now I didn't, until this point, I was really not aware of that. And I'm thinking how, as a private person or someone who is in charge of something, what steps he needs to do in order to be more prepared. So this is the next part.
So yeah, so yeah, that's a big question. I'm going to address this more in the second part, because it is a big question. Yeah, the tech giants are faced to enter the financial system, and the implications are even wider than what we spoke about. We're going to go deeper into that in the next part, and I'm waiting for more questions. What other questions do you guys have before we go into the second part?
I have a question regarding the sectors that the fintech companies are going enter into, because right now they're in the broad retail sector, right? Because they are focusing on just individuals and on granting some small amounts of money and to have some wallet. Of course, it's just first step of gathering more amounts of money, but after that, I believe that they are reconsider their strategy and just think out what to do with huge amounts of money that they gathered from the individuals. So are they going to enter into corporate sector or maybe some investment? I mean, like quasi hedge funds, other funds. I don't know. Just thinking loudly. What do you think?
Okay. It's a great point. So let me see if I understand this. What you're saying is that what we're seeing mostly is that the entrance of or the services that we're seeing are actually facing the retail customers. And what about the corporate sector, their SMEs or big companies, and where is the entrance into their services? So yes, exactly. one of the points that you noticed very nicely is that if we're looking at Google and I'd say WeChat mostly, they are facing with their financial services the retail customers, although not only, because they're also facing the sector of the small and medium-sized enterprises in both ways, in two ways. One is solving their payment services and everything that has to do with it, because some of the services that you're going to be, let's say in Square, you know, Square is one of the fintech companies, and it allows, one of its services allows, let's say, adding a barcode to a retailer's phone, and then you can just, you know, swipe credit cards. But what happens is that in the background, the retailer, the seller, right, has the whole everything that has to do with their accounting is already saved in the right places. Okay, so it's actually an accounting program that is aimed at small and medium-sized enterprises, and these kinds of solutions exist with the tech giants. And if you add to that layer of lending, because when Amazon was giving loans, it was giving it to their vendors, that's SMEs, that's small and medium-sized enterprises, small businesses. So the loans are not only for individuals, if they're actually, even if we're looking at Amazon, it's more loans that are intended for small businesses. Okay, so you do already see the entrance of these tech giants into also the small businesses. And then the question is what's happening on the corporate side, and I think that's a very good question, because I'm trying to remember and think if I've seen good examples of services that the tech giants are giving. Well, cloud. They're giving cloud. That's not necessarily fintech, but they're giving cloud, and that means that the data is also there with them. And then you have I'd say the ERP systems and the automation systems that have to do with accounting and all the rest of them, you have them, but they're not necessarily, it's not that the strong points of the tech giants as we know them, okay? It's not Google and Amazon and Facebook. These companies and WeChat, they're mostly, I'd say, aimed at the private individuals and the small businesses. You have other players playing with the corporates, but not necessarily in fintech, which is a very good, very important point, by the way. It's a very important point. Because let's say if I'm looking at the big companies, Oracle, SaaS, and all the rest of them, and IBM, they're not necessarily in fintech for the big companies. It's like you have a lot of small companies, small fintechs that are aiming at this sector, which is very interesting. There could be a good chance there for for doing something in that area, by the way.
And of course, that's connected with regulation, because right now it's hard to imagine what they are going to do without regulation, comparing with the banks that are strictly regulated, and just that you mentioned before.
It's a highly regulated area. That's true. All right, thank you for the question. What else? What other questions do you guys have?
May I ask you about insurers? Because we are now concentrating on banking, and in my opinion, those traditional banks are catching up with fintechs in terms of data processing, and they are doing well, I think. But insurers are somehow lagging this process. And what about tech giants entering the insurance business?
Okay, so yeah, that's a good question. It's true. Your observation is completely accurate. What we're seeing is that if we're looking at the different areas of finance, then we can see, let's say, that payments is very mature, and it's growing more and more mature. Lending is also, we didn't even talk about P2P lending or crowdfunding or stuff like that. It's kind of like obvious that with the ability to connect people, you could do that. And then you have trading and I'd say investments, which we're going to go, and it's still a little bit lagging behind. Although what happened with cryptocurrencies is kind of like a big boom in that area, and insurance is still stuck in the background. Okay, and insurance is a very, very interesting area. Amazon did enter into the insurance field. I think it was a year and a half ago. They decided to try, along with one of the other giants, not in technology, to create insurance products and sell them to the masses. They stopped at some point. They just left their insurance for their own employees. Okay, but they still do not have. I have still not seen enough. I'd say startups that are aimed at this sector, and there's so much to do there, because the amount of data that you have in insurance companies is vast, and the amount of paperwork that you have there is also vast, and the inconsistency and the discommunication between the different companies and inside each of these companies, when you look at it, it's like, wait, this is like I'd say it's like waiting to happen. It's like somebody needs to enter that field and start creating solutions in that field as well. And I haven't seen the tech giants already entering there in masses like they are in the retail section and in payments and lending. Okay, I am guessing that the next steps that we're going to be seeing in insurance, first of all, is automation. It's very, very important because right now there's a lot of paperwork that's involved there. RPAs are going to be massive there, and user interfaces, using chatbots and using digital tools instead of what exists right now. But one of the problems that we're seeing banks moving ahead. It's, I'd say, kind of not accurate to say that, because one of the problems that banks have, and insurance companies even has worse of a problem, is that the systems in their background are so old and so segmented that the systems cannot speak to each other properly. Okay, and that's one of the reasons that it's so I'd say interesting for banks to join Google Bank, because instead of coming and starting to build their own interface and building from the ground up and starting to think about how do we take data from this segment, from payments inside the bank to loans and to stock exchange, just to what they're holding in their stock portfolio. The systems don't talk to each other. Instead of building all of this, let's just give the data to Google, and then Google can do an interface and give us the data back. Okay, so a lot of banks are actually opting for that because of this inherent problem that the computer systems in the banks are so old. And if you think of the banks as being old, think about the insurance companies. A lot of the processes in insurance companies is still paperwork. It's still paper. It's not computerized in any way. Okay, so yes, there's a very big, I'd say, opportunity that has to do with insurance companies.